Hello everyone, welcome back to my YouTube channel. I hope you all are excited for today's video because I am pretty excited. The reason being because today I'm going to talk about the stress testing. If you want to work in credit risk modeling and in this whole series which I was preparing for this Python Spark, this particular video is going to be create a kind of a perspective in your mind that you can do a job only on the basis of this video, because there are separate teams on the stress testing level which are working in all the banks, whether it is Citi, JP Morgan, Wells Fargo, HSBC, Commonwealth Bank, any bank. Okay, so basically every bank have the stress scenarios where they do testing of their models. So on the basis of that only, I'm going to tell you and spill everything about stress testing. So first we'll discuss the fundamentals, then I will show you how we can implement it in PySpark. In previous video, we have covered another important topic. What is that? If you have not checked my playlist, please go back and check that. That is back testing. And before that, we have implemented a logistic regression model. So that is also again very important. And in this whole playlist, I think as of now, if you follow it from the start, so you will be on a very great level of PySpark machine learning. On that note, without wasting any time, let me move forward and let's talk about stress testing. So guys, one more important announcement before I start anything. You can download this notes which I'm going to prepare here. Also, the codes which I will prepare after this, I will share with you guys. So you can download both of them from the GitHub repository, which I will give the link in the description box. So you can easily download that. Now, let's come back to the topic of the day, that is stress testing. Now see, the objective of stress testing is to check the model, basically to check the model performance during different scenarios. Let's say you have scenario and there are several type of scenario which the stress test need to address. Before that, let me write the definition. So stress test is used to check the model performance in various scenarios. Now, what are those scenarios? Okay, that is a very important question. So they are baseline, adverse, and extreme. So whenever we are making a model or the modeling development team is preparing a model, so as a model validation team, okay, so this is a part of model validation. Now there are separate team for model validation. In model validation whole group, there are separate team for stress testing itself. So they check like if everything goes fine, how the model will perform. If there are some shift, how model will perform. If there are extreme shift, what is extreme shift? Let's say something which is unexpected, like corona. Okay, when corona happened, so bank obviously did that was not expected, and whole world was not able to run, economy was totally shattered, so that was a kind of a extreme scenario. Adverse scenario are when, like, let's say because of a certain reason any particular country's GDP is falling or unemployment rate is increasing, so that is known as adverse scenario. And baseline is ideal scenario, like if the market goes just like this at present, so how the model will be performing. Now what is model? Banking model is a code. Just let me make it simple. Banking model. What is model? You would be hearing this term a lot in your companies, in your syllabus. This is nothing. This is just a piece of code. It will be, especially when you talk about analytics, it will be either in Python, or it's in R, or it's in SAS. So these are three highly languages, like highly used languages, I mean to say, which basically the model are built. And all the banks, let's say name Wells Fargo. So they have this portfolio. They are working on stress testing. They are checking it for different portfolio. Like in Wells Fargo, they have mortgage, or let's say credit cards. So in all these scenario, all these bank do the testing for stress. Similarly, if you want to complete the stress testing, basically the teams they are working on the stress testing, they do the all scenario check. So the role is to check baseline, adverse and extreme, because that is the important, and you need to calculate in all these three scenario. Basically the core objective will be, whenever all these three scenario are happening, so how much loss bank need to bear. So bank can be ready in advance for all these three scenario. Like if baseline will be the scenario, how much loss we can have from someone's default, if adverse is the scenario, if extreme is the scenario. So bank is basically preparing itself for the loss, and they don't want to bear that loss particularly, so that's why they are already predicting it, so that they can like keep the enough capital in their pocket to absorb that shock. I hope this makes sense. Let's move forward now a bit. So for the stress testing, there are certain important components which we need to consider. So I will mention components of stress testing. So any team, when the people are working for the stress testing, there are certain component which they will always keep in their mind. Like let's say, what are the columns need to be used? Data columns. So I will tell you step by step, guys, and please note all this and make notes of this. Pretty sure, I'm pretty 110% sure, because these are all industry driven things which I'm teaching you after my more than 12 years of experience in credit risk. All these things are getting done in company. Okay, so like data columns which are needed, then you have the economic scenario. So what is the economic scenario at that particular moment? Then what are the risk models which are involved here? Then you have the aggregation. So what are these four? Data columns are, what are the columns which we would be using to prepare the model. Then economic scenario, like what are the scenario when this mod, like these columns are used, what are the scenario when stress testing is basically targeting, what are those scenario. Then risk model, like what are those models which are using stress testing. Then the aggregation, like the aggregation is happening on which level. Now if I mention the name of the column, so the number one column will be loan value. Like what is the value of the loan? You will have a column that this much of loan is still pending, so that is very important. Then interest rate, what is the interest rate on your loan? Then LTV, loan to value ratio. So LTV value is basically calculated. So for example, when you take a loan from bank, so bank usually give you either 80% or 90% of your property value. Bank is never giving you 100% loan. So that 10%, or if bank is sponsoring, let's say 80%, so 20% you will pay as a customer. So that 80% is known as LTV value. So at every point of time, the LTV value of the loan keep on changing. Okay. So now LTV is very important column for calculating any type of loss. Then you have borrower risk rating. So you should just remember these column names blindly. These are very common columns which all the company would be using. Borrower risk rating, then property value. Now what are the economic scenario? Let's say unemployment rise due to any economic slowdown. Then suddenly GDP of the country crash because of multiple reasons. Then the interest rate suddenly increased by the central body of that particular country. That can be one reason. Then the models, risk models which are involved here, basically we are doing the stress testing for which models? So they can be PD model, they can be LGD model, or they can be EAD models. Now this PD can be calculated for any portfolio, mortgage, loan, credit cards, or several type of loan like student loan or any education loan, anything. So similarly this can be calculated for all type of those portfolio. What are the aggregations? Aggregation mean like portfolio level sums, portfolio level additions. So whatever calculation you will perform on the basis of a portfolio, let's say mortgage is a portfolio, credit card is a portfolio. So this is the whole and soul basically of the stress testing on fundamental level. Okay. Now before going to the coding section of it, let me give you some more concepts. So the coding session will be then interesting for you guys. Now there are some technique which we use to perform stress testing. Technique for stress testing. Now what are those techniques? So the number one technique is scenario analysis. What is scenario? I just told you guys previously when I was starting, and let me go up so you will understand these are the scenario: baseline, adverse, or extreme. So what kind of scenario it is, on the basis of that only you will apply the stress testing. Now how you will do that? Let me give you a very basic example. Let's say you notice that the unemployment rise. Sorry about my spelling, guys, really sorry. I don't know why this is coming so bad. Okay, so the unemployment rise, let's say 10%. So there is a rise in unemployment in any particular country for 10%. So you can mention that base default probability of the person was, or the portfolio was 0.05. Now because of this unemployment, so we can mention it as U, there is a rise of 10%, or you can also mention it as 0.10. Okay, now if you calculate new default probability, so let me calculate new default P. So what will be the formula? The formula will be this base default P, base default probability, then multiply 1 plus U, that is your unemployment. So on the basis of this scenario, this will be your equation. So this is for the simple scenario. Now I would say let's move on to the code, and you will understand more actually why I have given you these all concepts, because when you will have the look at the code, so you will understand all these scenario very easily. Now my one more important point, please download this file from the description box link, which I will put in the GitHub. So you will see at the very first line in the description that you can download this. Now let's move on to the Python side of this and the PySpark overall. So I'll open the Databricks. Let's go to the Databricks. So guys, you can see my Databricks is already open. So you can also download the free version. I have told you multiple times that you can do that. This is a community edition, and with a single OTP you can log in into your scenario. Now your Databricks scenario. Now let me open the stress testing code for you. This particular code, and there are two codes. So let me take you through both of them one by one. Okay, this is going to be a bit lengthy video, but I am pretty sure after the end of this video you will not need to go anywhere else just to understand the stress testing, because that's the focus that I can cover all the aspects of this. Now if you see, so let me increase the font size. I hope this is better. So you can see that the purpose of this code is to perform stress testing in a mortgage portfolio. Okay, that is my end goal here. to evaluate how would it perform under adverse economic conditions. Okay, adverse economic conditions, that is the most common term you will hear in the stress testing models. Now, modeling default risk, it simulate means it basically kind of a predict, okay, how changes in external factor like unemployment, interest rate and property value impact the default probability of loan. What is default probability? That what are the chances that a customer will default? That is known as default probability. Now, next is assessing the loss. It calculates the LGD, that is the loss given by the default based on change in property value through the loan to value ratio. I told you guys, like LTV value keep on changing, okay, and use this to estimate the expected loss for each loan. For each and every loan in that particular portfolio, it will give you a EL value or ECL value, we also call it. Now, portfolio risk evaluation will say that finally it aggregates the individual loan losses to determine the total portfolio level loss, like whether that's a credit card, whether that is a student loan, whether that is any other sort of loan. So that is a full portfolio over level loan calculations under the simulation stress scenario, helping to assess the overall stress on the system or risk exposure of the portfolio under extreme but plausible conditions, okay, possible conditions you can also share. Now let's talk about certain steps which we are going to cover in this particular code. So the step 1 will be load mortgage data. I will teach you this. Then we will define stress testing, then we'll calculate the modeling, then we'll see one more important point is very important point to remember is that PD is always calculated separate to LGD and EAD because PD calculations are much more complex and will need much more data. After that, PD calculation, calculate LGD and EAD. Then we will calculate the estimated loss and then we'll aggregate on the portfolio level. So I mentioned about it when we were starting this. Okay. Now this is our piece of code. So let me share this code. So here the step 1 is about just creating the data. So what I'm doing, I'm just calling PySpark SQL and calling the Spark session and the call and when function. You'll just get to see why I'm calling all of them. Now, creating a Spark session and the name of the session I'm keeping as a stress test. Now, if you see the data, I'm just creating this data equal to, there are some value. The first column is loan ID, which is 123. Then you have loan balance. What is the balance left? Then you have the interest value, because interest value change for every type of person depending on your credit scores. Then the LTV value, you can see that this is 0.75, 0.85, 0.65. This is the LTV value. And then you have the credit score. Then you have the property value. So all those values are here. After that, you calculate the mortgage, basically data frame you are calculating here. So I am just preparing the data frame using the create data frame option, and data I am providing, and then I'm providing the column. That is a simple way. Here I created column, then if you go up there, so you have the data. So it will give you the name of each column sequentially. That's the thing which we are doing. So just in the first step, you are just preparing the data. There are not no calculations which you are performing there. Now define the stress scenario. Let's say you have given a scenario, there are unemployment rate or there are interest rate and the property value decline. So you have a multiplier for this. So basically your business team in your company, they will give you a kind of a multiplier or a coefficient which you need to multiply with the value. So you define these parameter externally. That's why it's the part of step 2. Define stress scenario means you need to give the multiplier or you need to give the coefficient which will be calculated in the last. This will be useful. You'll get to know once I'll go proceed. Now, model default probability. So for calculating the PD value, I'm just again calling the important library, that is SQL functions, UDF function and double type. Then based PD on credit score. Then you are calculating the what? You're calculating the probability of default. So because we have a logic here, so this kind of logic will be there in your company's code, guys. Okay, this is based on a US company. Reason being because credit scores are given by all the US firms usually, like for example FICO, then you have S&P Global, all these companies, they give that. Now try to understand the process. Don't try to understand the code end to end because that will be more confusing for you. Because see, this is kind of a industry level project which I want you guys to understand the whole and soul in terms of interviews. Now PD calculation done, then stress adjusted. Here you are adding the value which I just explained to you. If you see here in this document, let me just maximize this. When I was explaining this, if you see this particular value, the scenario analysis, you can see this new probability we calculated using the base default probability and the unemployment rate. So the same thing is happening here based on the stress scenario you're doing it. Then I'm just registering the UDF value. This is pretty much easy. Okay, now focus on apply to data frame. Now we are just applying the values to data frame. That is a simple thing. Okay, I hope you try to focus on the concept of base PD and stressed PD. Base PD is which is the actual value of PD, and then the stress PD when the unemployment rate has been increased suddenly. Now this is the proposition where we are calculating the PD. Now let's move on to step 4 where we'll calculate LGD and EAD. Now mortgage DF, I'm creating a data frame with columns stressed property value. See, stressed LTV is also used here. Okay, then loan balance. So all this logic is totally revolving around those columns which I explained to you initially. Then if you see LGD model, 40% of LTV. Now earlier it was 80%, now it is close to 40%. So LTV changes with time. Then we calculate the EAD here. Then step 5, if you see, so we are calculating the estimated loss, which is a product of 3 of them. Now if you see here, this PD, LGD, EAD, all these 3 columns we are modifying on after the multiplication of these 3 columns. You can see here we are calculating the estimated loss, and in the last I'm just aggregating it on the basis of a portfolio. So let me run this code for you, and you guys will be able to get this code automatically from the GitHub repository, so make sure you download that. Let's run this. It's already ran very fast. Now if you see this, so the loan ID 123, loan value, interest rate, then you have LTV, and then you have credit score, then you have the property value. Okay, now so this code is also having some issue. I just noticed it, guys. Let's see what it says. There's a invalid argument, not a string value on the class float. Okay, it doesn't seem like because this is a code which I prepared and I ran at my own as well. Let's do one thing. Let's try to run this code one more time because this session was open for very long. Let's see. Okay, so it says LIT is not defined. Okay, so I think I have not added the LIT there because LIT is a SQL function. So I think that is one thing I am missing. Let me quickly do that. LIT, it will come in LIT. Okay, because this was needed. Now let's run this piece of code. This one is executing now. Okay, perfect. Okay, great. So sometimes this happens, guys, because of the systems, because sometimes your kernel is open for very long time. So don't do that. Okay. Now if you see, so we have the data, pretty much we can see that. Now if you see the loan ID, so for all the scenario it has given us the expected loss, like for unemployment. So what are those 3 scenario? Let me just take you back to the code quickly. So on the stress scenario we were talking about, right? So unemployment, interest rate shock, and then the property value decline. So you can see for any of those conditions how much the loss maximum which bank need to bear. So that value has come up here. So this is an example of stress testing, guys. Okay. Now, if you want me to explain you that you want me to maybe write a code on especially the three scenarios which are like adverse, baseline, and extreme. So I will do that. But in this particular video, in this particular code, I have defined those three scenarios which are very common: unemployment, interest rate, economic slowdown. So these are the things which are actually highly causing it. Okay. Now, still, if you want to understand something, so please give a comment. I will definitely cover that in my next video. And the previous video and today's video is very important for the model validation like aspiring people, because model validation nothing, it's a combination of back testing and stress testing. There are so many other things also. I'm not saying that you don't need to learn anything else. There are so many other things, but these two are highly used. There are separate teams in banks for back testing and your stress testing. So I hope you find this video helpful. If you have not seen the other video, please go back and check in the playlist. That is very important. And then the previous, like the previous to previous video, that is the logistic regression, especially end-to-end market knowledge, the real-time experience knowledge is catered there. Okay. Okay, on that note, guys, I hope you like the video, and if you like the video, so please hit the like button, please subscribe to my channel, and please put comments whether it's positive, negative, if you like the video, not like the video, you want to give any feedback. I'm always open to the feedback. So I want you guys to just put that feedback so that I can work on that, and I hope this video will help you to get a job. Thank you so much, guys. I'll see you in the next video. All the best.